Welcome to today's NEO Spotlight. And today we're going to put a spotlight on a very innovative financial instrument that has been launched, or the first version of it, not the version, but the first product part of that family has been launched now, I think, a month or two ago. And it's called Canadian Depositary Receipts. I am very happy, very pleased, and very honored to have with me today to talk about CDRs, Elliot Scherer, who is Managing Director, Head of Sales at the Wealth Solutions Group at CIBC, and Alexandra Zatan, who is Director, Sales, also at the Wealth Management Solutions Group at CIBC. Alexandra, Elliot, welcome. Great to have you with us.
Thank you. We're glad to be here.
And we'll cover a number of questions during this discussion. This is a discussion, that we want to make, very open, transparent, and to the audience, feel free to put in questions. We'll make sure those questions are put forward in our discussion. We'll bring them in at the right time, or it may, start a new topic. And questions that we would not be able to handle during this discussion, we'll make sure that Elliot and Alexandra have them and can get back to you afterwards. But let's start with first things first. Elliot, Alexandra, what is a CDR? I just said it's a great innovative product, but what is it? And this is, of course, for those who have not yet had the opportunity to get the story.
All right. Thank you very much, Joss, for the interview. Thank you, everyone, for tuning in and having us join with you today to talk about CDRs. So very simply, CDRs, or Canadian Depositary Receipts, are a Canadian security that allow Canadian investors to buy shares of global companies in Canadian dollars on the NEO exchange with a built-in currency hedge. So Joss said it earlier, depositary receipts, or American depositary receipts, people are very familiar with them. This is just the Canadian version of that 100-year-old product, probably $1 trillion worth of value in that product. We've just launched it, as Joss mentioned, on 5 CDRs so far. We started in late July. You can see that, I think in the invite, you could see the tickers of what we have available. We're looking to grow over time. So that's CDRs in a nutshell, Joss. Anything that you want to add there, Alex? Sorry, that you want to cover?
Nope, that's good so far. Joss, okay. Go ahead.
Yeah, could you give me a bit of a comparison, and you may have a slide about that. Could you give me a comparison between the CDR and going directly into the stock? I think, that is a great slide.
Yeah,
maybe
sure.
One of you wants to take us through this.
Yeah, I can do that. So as you can see here, CDRs have a lot of similarities to a direct investment in the underlying share. Both are exchange listed, have eligibility in registered accounts, have rights to vote, receive dividends. Tax treatment will also be the same. Where they differ is where we really see the value propositions come through. So CDRs have a Canadian dollar denomination for trading, the currency hedge that Elliot mentioned, to shelter investors from volatility between the US and Canadian dollar movements, and also fractional share ownership. And from a mechanics perspective, to an investor, they'll look and feel just like they're buying the stock.
So what you really do over here is that you give us as investors the opportunity to buy the company in a very easy way without being exposed to the currency component, and you make it very accessible for everyone by having fractionalized it.
We're trying to improve the process for global investing, lower the cost, and remove barriers to invest globally. So that was kind of the background. I think we've mentioned the currency hedge here a couple times. For a lot of investors, they just want to keep their investments in Canadian dollars. They don't recognize that when they buy global stocks, they're actually having 2 investments, one in US dollars or whatever the foreign currency of the shares that they're buying as one investment, and the second in the company that they're investing in. And you actually need both of those to work. Both of those investments you have to get right in order to see the full gain of your stock. Oftentimes investors can get the call right on the company that they invest in, but those gains are eroded by negative moves. Specifically, as we talk about these US names like Amazon.com or Apple, but they get eroded by negative moves in the US dollar. So that's what the whole point of this currency hedge is to protect against depreciation of US dollars.
Just to add there, it's the inspiration for our own the company, not the currency tagline that you'll see on some of our materials.
Yeah, no, and I think that is a very important point because it is about achieving that objective, Alexandra. But I would also say, when I look at a portfolio and I look at my portfolio, you want to manage that across a multitude of assets. And yeah, maybe I want to be have an exposure to Forex, but I would like that exposure to Forex to be my choice and not driven by companies that I want to have in my portfolio and that are, listed somewhere else. So I think that gives a lot of flexibility also from that perspective.
Actually,
one
Joss,
element.
Sorry,
Yeah,
Joss,
go ahead.
one thing I'll add there, in our conversations with advisors to date, that a lot of advisors and clients, they already recognize that they need to have global diversification in their portfolio. And so a lot of them will have a North American equity portfolio. And even if they have a 50-50 split, to get 50% of their portfolio in Canadian names, sometimes they're scraping the bottom of the barrel in terms of name recognition that their clients might know. Not picking on any names, but whereas some of the global brands that exist in US stocks, they unfortunately don't make the cut because of the fact that their portfolios are limited to 50% US. So part of the reason that they limit it is just because they don't want to have so much US dollar exposure. 50% might be sufficient, but through this program, if we're able to mitigate that currency exposure for some of it, we're going to see, and we hope that we'll see, some of these model portfolios move to even a bigger allocation to US equities, because that currency play won't be as pronounced because we'll have the mitigation.
Yeah, no, and thank you for stressing that, because I do think it's indeed a very, very important point, and it is about managing, the diversification of your portfolio in a proper way. One other point that I just would like to stress, looking at this slide, no management fee. That's an important point also.
Do you want me to take that one, Elliot?
Sure.
Yeah. So as you rightly pointed out, just like ADRs, there's no management fee. Where we're making money is really in managing the currency hedge, and this is very transparent. It's disclosed in our prospectus what the maximum spread on our FX forwards would be, and that's 60 basis points on an annualized basis. So very competitive and institutional level that you see there.
In institutional level, can you tell me how this compares? Like, I got some US securities in my portfolio. I will not get into all the details around it, but for the fact that I asked my advisor to start moving those around into CDRs. But how do those rates compare with what we are typically exposed to? And now I'm talking about the retail investor.
So there's a couple different parts of it. So the first is when you want to buy a US name, you'll typically have to take your Canadian dollars and convert them to US dollars. And there's a fee that the bank or wherever you convert your FX is done, there's a fee for doing that. And that's generally in the 1.5%. It depends, obviously, where you go to get that currency conversion. So that's one element. And then the second is the managing of the currency hedge. So on the fee of the actual conversion, because clients aren't converting and they're buying these CDRs in Canadian dollars, the conversion is actually built in to the cost that they're paying for the CDR. And the person that they're buying the CDRs from, the market maker on the exchange, they're then converting those Canadian dollars to US dollars. And so that basically is completely taken off the table, that 1% or 1.5% that typically is charged to retail clients for converting. So that's a huge benefit for having this being traded in Canadian dollars. The fee that Alex was mentioning for managing the currency hedge, you know, Joss, if you're just a retail investor and you wanted to manage your currency risk on your portfolio, you know, there are ways of doing it through entering into FX forwards with, you know, a desk like ours at CIBC. And you could do it at a similar price, but it's a derivative and it's a cumbersome kind of process that you have to manage through with collateral and you know, risk disclosure and derivative documentation. So here we do away with that, and we just have it all built into the CDR, and at a very attractive and you know, economical fee, similar to the fee that is charged to currency hedged ETFs that manage it on behalf of investors. So there are lots of currency hedged ETFs in the billions in terms of assets in Canada, where they're linked to US equities like the S&P 500, and they have a underlying FX forward or FX hedge that's mitigating their risk against depreciation of US dollars. It's the same thing that we're doing here, and we're applying the same price or cost for that hedge that we would manage for those ETFs. We are doing the same for our CDR holders.
So what you're doing from a hedge perspective is you're providing in a totally transparent and efficient way what is a professional hedge, and you make it available to everyone, retail and any other type of investor. And then the conversion, that is pretty meaningful. Like you know, when I listen to the figures that you put forward, 0.6 versus 1 to 1.5, that has an impact.
Actually,
on my portfolio.
Right, the 0.6 is on the FX hedge. The actual spot conversion works out to be way, way less than that. I could go through the math, but you know, Alex gets upset at me every time I try to go through the math. But you know, I'm a math nerd, I guess. But you know, if you look at the price that you pay for a CDR, it's quoted on your market with a bid and an offer. And so that bid and offer, that range there is all that the market maker has in terms of spread that they can charge. And so for every, you know, I've forgotten already, but I think it's for every cent in bid offer works out to being 0.02% for the spot FX. So if we have a 5 cent wide bid offer, that works out to be 0.1% for spot FX. So the spot FX is a meaningful discount relative to where they're getting spot FX. So that's where I was saying you're taking advantage of institutional rates. If the 60 or 0.6% annualized rate for the FX hedge, that is for the FX hedge, not the spot.
That's on the hedge. That's on the hedge. Wow, that's even more impressive. So let's maybe answer a quick question that was put forward here. Are CDRs classified as Canadian property or assets, I guess?
So I can take that one. So they're going to be just like owning the US shares. They will be US property. So that's why we, you know, on the previous slide we had shown with, you know, having a W8 BEN form, and this is for withholding. So any dividends that are paid, I know, you know, none of the names, I guess one of the names we have now is a dividend. In that case, the proper withholding needs to be applied to that underlying.
Thank you, Alexandra. And to the crowd, don't hesitate to come in with any other questions. They will all be answered. Let's maybe move to another set of questions. And I think you already answered it. Like when you talk about the characteristics of the products, you're giving, in fact, answers about why. But there's more reasons. I think. Why did you decide to come with this product suite? And who are the investors that you think should be interested in it? And I think you already got some indications that retail investors like myself are interested in this. But how about you mentioned advisors? You know, who can be discretionary or non-discretionary advisors. I can think about institutional investors. I can think about manufacturers of products that have some of these securities in as constituents of their fund or ETF or whatever it is. So why and who's the target market?
I'm going to start because I got a terrible memory, and if I don't start, I'll forget the questions that were asked. So the why, you know, it started off with interest from advisors on two fronts. So they had clients who would look at their statements at year end or month end or quarter end, and they would know that the S&P 500 was hitting all-time highs, or they would know that stocks in their portfolio were hitting all-time highs, but they weren't seeing the net Canadian dollar return reflecting that strong performance. So they were, the advisors were then having to explain to clients that they're making these kind of two investments, one in the US dollar, one in the actual company. So that was kind of the background in terms of the why that we created it. Once we were in the lab and we were creating it, we also built that fractional share ownership, which is another key benefit. And then the last bit on why we created it was we created the US names first. And the reason we created the US names first is because that's where our investors in Canada are most invested right now. And that's where we saw the most interest. So, you know, that's where we wanted to go. Like you're going to ask us questions, I'm sure, throughout about, you know, future growth plans or, you know, just everything is rooted in client feedback. So to the extent I saw there's a question on the chat room about what names are going to be added next, it's based on client feedback. That's our objective here. So so that was the why. And then the clients was next. So Alex, you take that one.
Yeah, I can take that. But Joss, you know, you hit the nail on the head there. It's CDRs are for everybody. Really, there's a use case for everyone. It could be do-it-yourself investors who maybe before had barriers that Elliot had mentioned earlier, and we're trying to remove those barriers by improving the process, lowering the cost, reducing their risks. And then, you know, you also touched on institutional investors as well, potentially asset managers who don't want to manage, you know, the hedge themselves will look to incorporate CDRs in their models. You know, it is a cumbersome process, so we can alleviate some of that burden for them. And then also you touched on advisors as well. So the discretionary model portfolios are a really good case to look at. You know, maybe there's a stock like Amazon where it's super expensive and they want to add it across their whole book. Well, maybe you've got someone's TFSA that only has $50,000. Are you really going to put a $3,000 or $3,500, wherever it is now, stock in their portfolio? It's going to be too overweighted. They wouldn't be able to even hold the whole model portfolio. So having CDRs that are priced around $22 Canadian, first of all, they don't have to manage the currency for the model, currency risk and conversions, but also they can adjust how much they want, you know, that model to have as a weighting to names like Amazon in a more flexible way.
That is what I would call democratization of access, which is great. It gives everyone the opportunity to participate. Looking at a few questions here that are coming in, and I see some are related to discussion. There's one about tax. I will come back to that afterwards. But do you know if ADRs have been adopted in US funds, and do you think CDRs will be in some of the Canadian funds? Maybe take that one. It ties back to our discussion about, you know, who's the target market.
You know, I think Alex talked about it. I don't know. I haven't looked at the filings of all the regulated US funds, but I have to assume that ADRs, which are now a 100-year-old product, have been adopted by some of these US-based mutual funds. You know, similarly, 15 years ago, had you asked me if I thought Canadian funds would buy ETFs, I would say no. Why would a Canadian mutual fund buy ETFs? But now institutional investors are the largest investors in ETFs. Yep. So it's entirely possible, and we believe, and Alex said it very well in terms of use case, we believe that over time, as the market evolves, as these become the market standard, it's entirely possible that CDRs will be utilized by Canadian fund managers.
It comes down typically, you know, and that is the same thing at what happened with the ETFs. It comes down to performance and efficiency. And I will ask you a question about that afterwards. So be ready for that one. Other interesting question that I'm going to take, of course, because it was one that I wanted to go to also. How do you buy CDRs?
So I mentioned this a bit earlier. The mechanics of buying a CDR are exactly like that of buying a share. So investors will be able to choose their platform of choice. Doesn't matter where they trade, they'll be able to access CDRs. So go to their trading platform, they can look up quotes, and then the CDRs are going to trade on the NEO exchange, and market makers will facilitate the trading just like any other ETF, and they'll manage subscriptions and redemptions with CIBC Mellon and CIBC to manage the flow. And that's pretty much it.
Yeah, and this is I think all the examples that you see over here are discount brokerage or retail focus examples. Of course, for advisors, of course, for institutional investors, they just go the normal channel as they used to buy any other
actually, so
publicly listed stock.
Right. So one thing that I'll just add there, maybe it's two. So if you have an Investor's Edge account and you type in AMZN for Amazon, the CDR will be what comes up. So I know we've got this fancy schematic, but it's that simple. It's a stock that trades on an exchange. If you're an advisor, it'll depend on your trading platform. I know that we're CIBC and our advisors use Thomson. So on their Thomson terminals, they type in AMZN, and if their country of default is Canada, then that's the CDR that shows up. If their country default is the US, they'll have to type in a hyphen G as in George, D as in David.
Thank you for that, and that's always important information to have for people who are looking for the stock. So I think it answers the how do I buy it, and I think I see lots of questions coming up about how can I buy Square? How can I buy stocks in Europe or CDRs that represent European or Asian stocks? So even though I was going to come back to that one a little bit later, let's talk a bit about your plans going forward. With respect to the US, we have 5 CDRs available now. Some great names. What is it? Google, Tesla, Amazon. You talked about it. Apple, and then the 5th one I should know it, but
Netflix.
I'm sure Netflix. Thank you very much. And I was reading an article by the lady Catherine, I forgot her family name now. I hope she will apologize. Who is running the ARC ETFs, and she was pretty bullish about one of those 5. So I'll let you all do your own research about that. But different stocks create information and excitement at different moments in time. So how are we going to get more? How are we going to get access to a wider portfolio, both in the US and globally?
Sure, I'll start with that. So, we talked about at the beginning that we wanted to start with names that really resonated with investors. And the US market obviously has some of the biggest, most popular companies in the world. And, even though Canadians can already purchase these shares, some of them may be too expensive. So, looking at names like Amazon and Google made a lot of sense because it made it more accessible to investors. So starting with that seemed like a good choice. Now, we aren't just going to pick these names in a vacuum. We are soliciting feedback from advisors. Some retail investors do contact us, and if people want to write about CDRs, we may see other requests that way as well. So we're really trying to gauge what's going to be meaningful for investors, and that's how we're going to pick names, and we'll be rolling out more names over the course of the next few months. I don't know, Ellie, if you want to add.
Yeah, well, listen, we filed and we were seated by the OSC, I think it was late last week, for our next 19 CDRs. They're all US names, so that'll take us by the end of the calendar year to 24 names. The next suite of 5, if I'm going to try to rattle them off, I don't know the exact date they're going to launch, but it's Visa and Microsoft and Facebook and Disney and PayPal are the next 5. But, we do plan on growing. So that'll take us to 24. Alex and I spent the better part of 3 years with our colleagues, on the trading floor, the better part of 3 years working with CIBC Mellon, working with NEO, working with the OSC and the CSA other utilities within the market to create this. And if there's demand to grow in Europe, if there's demand to grow in Asia, we will look to do so.
Well, Elliot, let me tell you, I have, as you know, some people on the call probably don't know, I've got European roots. And when I asked my advisor to buy a couple of stocks over there, I won't even tell you what the answer was, but it did not work. And I'm looking forward to see you guys continuing to expand and give us all more and more access in a very efficient way, and in a democratized way to all those quality stocks around the globe. Okay, let me have a quick look here if there are any questions that we cover before we get into an exciting part. Are there any limits on the number of CDR units you can purchase?
No, there are no limits. I think there's another question that's kind of related to that about liquidity as well. So, the limit, I suppose, is any number of outstanding shares in the U.S. market, but that would be a crazy occurrence if we could use all of those, have all of those shares. But no, there's no limit.
Yeah, I think the liquidity question, it's very similar to the education that we had to do in the ETF space. Volume on the exchange does not mean the amount of liquidity that's there. So we've picked, started anyway with the most liquid names. All 5 of these names are more liquid than any security on any Canadian stock exchange. And so from our perspective, the market maker has the depth of that market to help make spreads tight for the Canadian listed share. So, that's when we worked with the OSC, that was a criteria. They wanted to make sure whatever name that we picked had proper diligence done from a regulatory perspective. And so as we grow, we will continue to have that, sign off, if you will, from the OSC. And that's why, our next batch, I named the first 5 that we're going to come up with next, which will be CDRs 6 through 10. And they're all names that have, massive liquidity.
Yep. And I think it's very important to understand. So limits will only appear when you impact the liquidity of Amazon in the US.
Yeah,
and that's a pretty liquid market. Yeah. And by the way, thank you to the audience. The person running ARK Investments is indeed Katie Wood. So if you want to do some research, look for Katie Wood. Let's get to another very exciting part, and the question that I announced earlier. How have the CDRs been performing so far? Has it been the right experience? And then follow that maybe up with your views on how things have been going outside of the performance of the CDRs, but how has the reaction been of the public, and how has it been growing?
So this is the performance of the longest standing CDR. So we launched the Amazon.com CDR on July 27th, and it's been around, I guess, now for 6 or 7 weeks. As you can see, there's actually 2 lines here, a blue line and an orange line. I say that, as you can see, it's only a few spots where you can actually see that the orange line differs from the blue line. Over this 6 weeks, the NAV, we don't have a concept of NAV because it's not a fund, but the NAV, if you will, has differed from the actual share by 0.05%, 5 basis points, which is kind of almost exactly as we had hoped, because it's been 6 weeks. And if you kind of normalize that out to a year, that takes us to about 60 basis points, actually a little bit less in terms of the delta or the difference. And that, for the most part, will be a result of the fee that we're applying. And so from a tracking perspective, we're thrilled that it's working exactly as we had hoped. There are some days where you can see the orange line differed. That's because at the beginning, the trading volume of the CDR wasn't as active, and it's never going to be as active as the trading volume of the blue, the NASDAQ listed security. And what we learned was that the last price, and that's what's used to determine and to drive these charts, it's the last trade of more than 100 shares. So on one of the days there, early on, the Amazon.com shares moved about 0.4% in the last 10 minutes, and we didn't have a trade of more than 100 CDRs in the last 10 minutes, so we didn't see that in our closing price. But otherwise, it's been kind of a perfect mirror in terms of performance. So that's great. And actually, interestingly, last point on this is that the FX rate has actually moved around quite a bit. There was actually 1 week during this period where the US dollar rallied by 3%. We didn't get that participation because it's hedged away. The next week it sold off about 1.5%, but all the while the blue and the orange line were tracking, and that was just noise. So it's perfectly tracking, doing exactly what we had hoped. So that was the question one. Alex, you're going to be on question two. Oh, sorry.
And before we go to question two, I think it's very important what you said about what you are comparing. You're comparing the last prices. If you would look at it intraday, and you know, I'm keeping an eye on the market myself. If you look at it intraday, that orange or the places where you see some of those differences would disappear. And I got to say to you and to your organization overall, you know, hats off to the market maker who's providing those quotes. They're doing a fabulous job, and that is what's giving this type of quality of performance. Second question, that's maybe for Alexandra then. What is your experience so far? What has been the reaction of the market, and how would you qualify the success of these initial launches?
I'd say we've had a lot of really outstanding and positive feedback, lots of engagement. I mean, we've got a lot of people here on this call today, which is great to see. You know, some advisors have said to us that this is the exact product they've been looking for, and are very keen, you know, following up regularly on what's the next name. So we have a really positive outlook and super excited to just get more names out there.
I think in total our assets are north of 50 million, but really, you know, launching a product in the summer and during the summer of a global pandemic, never easy to get the word out. But we're quite pleased. I think we've got a buying activity from 29 different distribution networks, so wide adoption. Every day we've got like a trade a minute, basically. So it's we can really see that it's being adopted. It's not chunky at all. It's been widespread adoption, which is you know, fantastic to see. I think the average ticket size is like in the $4,800 or $5,000 Canadian. So really, to the democratization comment that you made there, Joss, like that's definitely what we're seeing.
Yeah, no, I think it's very exciting, and we also have to remember that that you did your launch in you know, large part of it covered August. Now the markets are reacting, and you see a lot of you see the volumes are picking up again overall in the markets, which is great. Now, I see a couple of other questions over here, and maybe cover a few of those because I think there's a couple that are very easy to answer. Can you hold CDRs in RESPs, RSPs, and TFSA? I think you gave the answer at the very beginning. The answer is yes. What is the standard US withholding tax that applies to CDRs?
So that's going to be specific to the investor. You know, that will be dependent on the W-8 forms that they will fill and give to their broker, whether it's their advisor or to the, you know, discount brokerage, and that will dictate what level of withholding is applied.
Yeah, and so that was a separate question that we saw out there. It's not being withheld before it hits our custody or the CDR holder's custody account at Bank of New York Mellon. It's being withheld before it goes to everyone's like the actual networks that we're distributing it to.
Yeah, thank you for that. I can leave that one aside. An interesting one, because I remember me bringing that one up a while back. Are we going to see Berkshire CDRs?
Berkshire is in our list of our next 19. It's the B class, I want to say. Sorry, I just actually got this question from someone else. It's not the A class. Did I get that right, Alex?
Correct.
Yeah.
Thank you. Someone is going to be happy here. is a fractional share ownership. The fact that the CDR price is a fraction of the US underlying security.
Correct.
Yes.
Yeah. So every depositary receipt in the world has a concept of a ratio, which is the number of depositary receipts are equivalent to a share. So the way that we unitize this is like, and I'll use Amazon because it's the most, graphic example for people, is that we had a 1 to 200 ratio. So it took 200 CDRs to be equivalent to one Amazon share. So when we have that in that unitized version, the 1 to 200, that's how we can offer it out at $21 or $22 CAD instead of 3,500 US.
Yeah, which your market maker is also managing, which is again a great job over there. Where can I see trading volumes of the CDRs? I'm happy to help with that, but I'll let you go.
Yeah, by all means.
Everywhere, I would say, all the discount platforms that Alexandra and Elliot showed earlier, Reuters, Bloomberg, just name it, and web platforms. Again, it is really published like any other listed security is published. And if for a reason or another you have a concern and you cannot find what you want, or you don't have access to a platform, or the platform is not real time and you want it real time, just go to the NEO website, neo.inc, and you will get real time information there, quotes, volume, and everything else that you can imagine. How will ADRs be displayed on client statements?
Yeah, so you want me to go? So, like CDRs are live. So that was one of the questions. So we've been live for 6 weeks, and they appear in the client statements. If you own them, I own a couple, exactly as they're legally named. So for Amazon.com, it says Amazon.com Canadian Depositary Receipt bracket CAD hedged. And so that's what it'll show up in your statement, and then it'll show how many units that you have, and then the value of those units times the price.
Yep, and it comes in, and it's put on there again like any other listed security that you would buy.
Actually, that's a good point. That's a good point. In terms of the security setup, so we had to work with Broadridge and all the other kind of utilities so that it does show up as an equity, and from a industry perspective, it'll follow the industry of the underlying issuer. So if, let's say, Apple is a technology company, that's the way that it, to the extent that there are downstream market data services that you use, that's how it'll appear.
2 more questions left, and I think we ran nicely over our 30 minutes, but we said that would happen, and our audience has continued to very largely stay with us, which is always a good sign. One that I got to bring up: are CDRs available now?
Yes, they are. 5 in the market, as we mentioned earlier, and lots more to come.
So yeah, the first ones are there. Some big names. Okay, I'll take this one that just came in. Does the 1 to 200 ratio apply to all CDR, or does each of them has a different ratio?
Correct. Each of them has a different ratio, and you can find the ratio on our website, cdr.cibc.com. They'll be listed there beside each of the CDRs in our directory.
And we came to the 1 to 200 ratio because we were targeting initial price for like our IPO at around $20 Canadian. And so the 1 to 200 was applicable for Amazon because it trades at 3,500 CAD, 3,500 US, excuse me. Whereas let's say a stock like Apple, which trades in the 150 US range, if we wanted to get it to the $20 Canadian, we don't need a 1 to 200 ratio. We need like a 1 to 8 ratio.
Thank you, Elliot, for that clarification. And the last one that I will take is there any plans to offer options on the CDRs?
I would love to offer options on CDRs. We get that question a bunch. So that's just a question for you and I to take offline. Something that I hope that we will be able to work on in the future.
Yeah, I think so, to be very honest with you. But I'm probably saying more than I should say by saying that. So I think this was a very interesting and thorough overview of CDRs. Alexandra, Elliot, a very, very big thank you for your time and for answering all the questions also of the audience. And to the audience, thank you for joining us and staying with us again, even though we pass a bit beyond the usually allocated time. I think the key message or the key messages that I take back with me when I look at our discussion today, that is CDRs, you own the stock and you don't own the currency, and that is very important. Two, it democratizes access to securities for those who cannot easily put, the 3,000, or let's not even talk about some of the other securities, dollars in there because it doesn't work for their portfolio. It's efficient, it's easy, it's accessible, and it has shown a quite fascinating tracking performance since launch. I am very excited about your future plans. I think what is critical is indeed to continue to offer more of these CDRs and give people the opportunity, to choose the securities that they want to go in, but also live with, what's happening in the market. Different products are going to be, more interesting to investors at different times. Thank you for coming up with this, and wishing you incredible success in the months and years to come, because your success is going to be the success of the investors. Thank you, Alexandra. Thank you, Elliot. And thank you to the entire audience. Have a great day.
Thank you.